feel like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should.
GETCRACK. Wake up, motherfucker.
Let's do Kramer's Mad Dash as we count down to the bell, referencing this Palantir call we
I
mentioned.
alluded to this call, but I think it's kind of symbolic of where we are. Palantir is probably the most highly valued enterprise software data analytics company, and you see this. It's kind of also been captured retail. Some people say this is the GameStop of our era. I totally rebel on that. I think what really is, this is very, very high growth company. And we really don't know how to value it. We don't know how to value it because Alex Karp, the CEO, is basically saying, listen, our valuation is confused. We're the fastest growing, but we're not really going to tell you everything that we do. I am a believer in Alex Karp. I ordered his book. I've read a lot. I've seen his videos. And I think that what he's got here is something that is much more special than Morgan Stanley talks about. It is the early stage of AI, and Alex Karp really gets it. It's both defense, but it's also consumer. And I have growing respect for what the company's trying to do. And I think that even though it seems 100 times earnings, it may turn out to be much less in terms of the multiple. It is the highest, got the highest so-called rule of 40 about its growth and margins of any company. And my hat's off to these guys. If you go back and read the last couple of analyst reports, it really is the exciting AI company of our era.
Is the exposure to government a plus or a negative, do you think?
I think if it weren't for the fact that you have people like Elon Musk who are aware of what he's doing, Peter Thiel behind the scenes, I would say it's a negative. But now I think it's a positive. And the main reason why is because the Defense Department would be rationalized. They understand the procurement process. They would really take out a lot of the costs of the Defense Department because they think that what's really at stake is cyber, not necessarily hardware. And I agree with that. I find myself agreeing with Alex again and again, even as he's certainly an abrasive personality, but so is Elon Musk. And I've tended to try to temper my view that he is abrasive, knowing that he is in some ways trying to be a street kid from Philadelphia, not unlike Bernthal, who tries to be a street kid from Baltimore, who's really from an upper-class group in Washington.
Yeah, he has been outspoken about the shorts a
Yes.
few times on our air. Is it your favorite enterprise name?
I talked about it this weekend and how I struggle with it. Salesforce is my favorite. And I said, look, I would love to put it in my Chapel Trust, but it doesn't fit any parameter other than the fact that I think it's going up. And that's a good hedge fund reason to own, but certainly not a good portfolio reason to own.
Interesting. There's a look at Salesforce. We mentioned the Guggenheim downgrade earlier today.
Yeah, I mean, look, I think that you have to either believe in the numbers of Agent Force or you somehow don't think it's caught fire. And I think if you read Mark Benioff's blog, you would be hard-pressed to think it's not caught fire.
Yeah. The other one on this one was Sam Altman's comments about AGI and the likelihood that we will see agents work their way into the workforce this year.
And I think that's what Jensen Huang could be talking about, which is that you're going to see robots everywhere. One of the notes that I thought was very encouraging, encouraging published this morning by Mark was that healthcare is an area that we haven't seen. When you do a health, I've done one of these FDA tests for a drug that I've invented, and you can't afford it if you're an individual. There's no individual for other than maybe Musk. But if you had agents that could check in on the patients, then next thing you know is that you would have very inexpensive costs to be able to get in front of the FDA. It does matter.
We'll watch those calls and a bunch of others as well. Opening bells coming up in about 4.
It's an analyst. Gil Loria joins us now with a hold rating, $135 price target on the stock. Why are you still so cautious, Gil?
Well, NVIDIA is about to have a record year, an amazing year, and that's a lot of what Jensen Huang's going to talk about tonight. The question, as Christina is indicating, is more about, is this sustainable? Can they grow again next year? For the stock to continue to go up, not only does it have to deliver this record year, it has to keep growing into the next year and the year after that. And that really depends on AI tools progressing and creating value for the customers, for Microsoft, Amazon, and Google's customers to justify those three companies buying more and more NVIDIA chips past this year. So that's the big question, is what happens?
But even if we don't get an answer to that question, aren't they still buying and buying and buying? Aren't they still continuing to spend billions and billions of dollars, and that benefits NVIDIA?
That's right. And Microsoft has given an indication that at least for the balance of their fiscal year, which goes through June, they're going to keep buying these chips. But they've also, if you listen carefully to what Satya Nadella said in a recent podcast, he also talked about the fact that he's no longer chip constrained, that they're now evaluating their CapEx going forward. So as soon as July, he may say something along the lines of, we've invested enough CapEx in data centers, we may want to slow down the rate of investment or maybe even just maintain it. And since he's NVIDIA's largest customer, that would be a signal to the other customers to maybe do the same thing. That's what we'd be looking out for from NVIDIA's customers. But in terms of today, the news is going to be great. Tomorrow, they're going to have an analyst event, and maybe they can give us something past this quarter. NVIDIA only gives guidance one quarter at a time. Tomorrow, they have an opportunity to give us a full year guidance, maybe longer term guidance. That's what we're going to be listening for.
That's interesting, Gil. When you think about lines along the lines of from a customer, what are the phrases that you'll be looking for, listening for tonight?
New applications, new success stories, new use cases, things that are actually creating value to customers. There's a lot of value already being created in AI for self-driving cars for Tesla, for better ad delivery from Meta. But beyond that, we need to see more companies like Salesforce being successful with Agentforce. If Salesforce accelerates growth this year based on delivering new AI agents, we'll get better visibility into these tools actually justifying this incredible level of investment. We need to hear more of that both tonight and over the coming months to know that this investment is worthwhile and that we haven't been over-investing.
So do you like any of the other chip names better at this point?
Well, in terms of the mega caps, what we really like are Amazon and Meta. Again, Meta already generating tremendous value from AI, selling more ads at higher prices, and Amazon building out this AI capacity to help everybody else develop their tools and applications, and they're not getting as much credit as Microsoft, in spite of the fact that AWS is still the biggest cloud provider and now the most advanced in terms of being able to deliver AI capabilities. So we think those two mega caps will outperform this year. And if you want to talk about the derivative from Amazon, Amazon is using its own chips internally, and they are using chips from Broadcom and Marvell in order to deliver those capabilities. But we think that Amazon's the one that's going to benefit this year from more and more companies trying to deliver AI capabilities.
Hey, what's up? It is January 7th, 2025, and everything is going according to plan. So if you saw my Friday show, you know what was up. You would have been selling your longs for the past couple days, right? And from there on, let me see. I think I did a show on Friday, didn't I? Yeah. So past couple days, Friday, Monday, you were selling, and now you see the results. You see the results. We were going to look at Bitcoin as a short, right? I used MSTZ to short it. So that from yesterday to today, that's good. So we are done with that. All right, guys, we are done. Now, what's the next step? Next step is we're going to have to wait for Friday because Thursday there will be no market. All right, except for crypto, of course. No market because the NYSE, the NASDAQ will be closed because of Jimmy Carter. So they are going to have a day off as a day of respect, I guess. So no trading on Thursday. Okay. So this is it. Your last day of trading will be tomorrow before Friday, and that will set the tone for the rest of the month until Jerome Powell speaks again. Now, the last video was about NVIDIA's SEC keynote, and I'm going to go over exactly what was presented last night here. And I think that's done. There's nothing else that will pump up the markets until we get earnings and Jerome Powell. Nothing. Everything is now data driven. Any kind of economic data will shift the market up and down. Anybody who's an investor is going to get annoyed. If you're a trader, you're making money up and down. It doesn't matter. Okay, so this is what it is. I put the link in the chat here. NVIDIA unveils Project Digits at CES 2025. Did I say SEC? No, CES. That's the Consumer Electronics show. I guess that's the S is for show. Usually they had it with the Adult Video Awards at the same time, but I think they changed the dates. They don't want to be having the same conference with adult video porn stars. Anyway, so AI computer, which can open AI's ChatGPT 4.0 at your fingertips. Okay. NVIDIA has unveiled its latest AI supercomputer called Project Digits, which is said to be the world's most compact device to offer computational power that was previously deemed impossible. NVIDIA takes edge AI to a whole new level. Project Digits brings a phenomenal performance in a compact package. Team Green certainly made huge strides at the CES 2025 keynote, and when it comes to AI, the firm surely nailed its releases, starting with the mainstream RTX Blackwell GPUs and working up its way into computing products. NVIDIA indeed showed why it is the boss of the tech markets, and their Project Digits unveiling surprises us the most. Okay, let's see, zoom in. All right, you see all that in that little box there. 20 ARM cores. So that's part of the Grace CPU. 1 petaflop floating point 4 AI compute Blackwell GPU. Okay. You have Connect X. Looks like this is all the interconnections going from this chip into that. You have a 4 terabyte SSD, high bandwidth unified memory, 128 gigabytes of low power DDR5X. Okay, nice. For those unaware, this particular project can be called a mini AI supercomputer that has a size that makes it easy to use on your desk. But the computational power here is enough to cater to LLMs, so that's large language models such as OpenAI's ChatGPT 4.0 and many more. Driving a bit into the technicals, NVIDIA's Digits AI system comes with a new and unique GB10 Grace Blackwell superchip. The chip utilizes NVIDIA's Blackwell GPU 1 petaflops FP4, so floating point 4 AI compute power, and an ARM-based Grace CPU, which features a 20-core configuration. Interestingly, this is the first time NVIDIA and MediaTek have collaborated on a SoC. That's system on chip. Apart from the automotive segment, and Jensen, that's the CEO, Jensen Huang, especially credited the Taiwanese SoC manufacturer for their expertise on the project. AI will be mainstream in every application for every industry. With Project Digits, the Grace Blackwell superchip comes to millions of developers, placing an AI supercomputer on the desks of every data scientist, AI researcher, and student. Empowers them to engage and shape the age of AI. Apart from this, The Digit supercomputer is equipped with 128 gigabyte low power DDR5X memory along with 4 terabyte SSD for storage. Okay, components interlinked through the NVIDIA C2C interconnect, chip to chip, which allows NVIDIA to leverage architectural capabilities to bring in tremendous power. Speaking of power, the Digit system is said to run up to 200 billion parameter large language models, LLM, and by using NVIDIA's ConnectX networking, linking two of these systems allows us to run 405 billion parameter models, which is fascinating. All right. Okay, right there. Okay, that's it, guys. You will have a supercomputer on your desk. I wonder how much this will cost. Maybe I should get one. Maybe I should get $3,000. That ain't bad. That ain't bad. I don't know what I would do with it. But I'm sure some of you smart guys might find this very useful. If you can pack this much power in a little box like this, yeah, might as well get one. Now, what does that mean for the stock market? Well, that's the last good news you'll get, okay? Because right now, as we can see, let me check how the market's doing. It is still down. Nasdaq's trying to recover a bit. Bitcoin found a little support, okay? But here's the reason why. This is what I was afraid of. Here we have service PMI. So 30 minutes after the market opened, we have this service PMI. Nothing too earth-shattering. 54.1, not very hot. Okay, so service economy still doing well compared to the manufacturing number last week. Last week, you had manufacturing number on Friday. That pumped up the market. Why? Because the Fed, Jerome Powell, cares about inflation. Here we see this is hot. So we have weak numbers on manufacturing. That's okay. Even if manufacturing still contracts, that at least doesn't mean we're going to have problems with inflation because employment numbers in the manufacturers are down, still down, very low. I think it was 46 it came in. Now you look at the service, very different. It's still hot at 51.4. So employment in the service sector is still growing. But the worst thing is you see this service prices is at 64.4, way hotter than the expected 57.5 or 58.4. This means Jerome Powell will probably keep those interest rates higher for longer. So there is no rush for the Fed to cut rates this year. We may not even get one cut this year if this keeps up. The other worrying thing is this: JOLTS job openings. More jobs are opened right now. Employers are looking for people to work. The labor market is tight. That means also inflation is going to stay sticky. Okay, guys, that's it. And that's why the market is down. Good news is actually bad news. All right. You do not want these numbers. You actually want an economy that is softening. We don't want this to stay hot. That means Jerome Powell is more likely to keep interest rates high. And what that means later is that the longer they keep it high, the likelihood of a crash in the economy is going to keep going up. So the probabilities that we will have a hard landing is now increasing again. We will not have a soft landing as people hoped for last year. So the hope of last year, which caused stock market to go up with the backing of tech, is now going to shift now. AI will not be enough to keep things going. And at this point, China is also trying to stimulate the economy, and that will also create higher prices in commodities. So then you'll see manufacturing prices increase as well because the input costs to those factories, copper, raw materials, energy, will cause those things to stay sticky as well. So the Fed will be trapped. All right? Trapped. So anyhow, let's see what we got here. Let's look at the charts. This is going to be good. This is a good year for trading. So people trading will have a very good time. So JDub says option spreads, wide wings, theta erodes, times value, delta shifts the game. Okay, I don't know if that's a riddle. I'm not an options guy. Anybody here know about Greeks? They can go try to interpret what the heck J-Dub just said right there. But for me, let's see. We have to strategize for the next moves. Okay, so the past 2 weeks were pretty easy, slam dunks. All right, so those are not going to be hard to do. The next ones will be the hard ones to do. Okay, so let's see. Let me get my stuff here. Charts and things. Okay, let me get that. I got presentations. Do this. Okay, so then Friday I showed you I made about like 20 G's, 18, whatever. By the close, it was like 20 something plus. And then I just show you this to like prove to you guys that yeah, you're gonna have to swing. Okay, you're gonna have to swing. So here's J Dub's comment. I don't know what that means. Blah blah blah. So anybody want to elucidate on that? They can. I have no clue what any of that that means Greek to me, right? It is Greek. Might as well be Greek. So here, so yes, so okay, right here. SMCX. So I was trading that. This is the 2X ETF for, and one of the last videos I'll play is the large popularity of these ETFs, okay, of these single stock ETFs. So that's 2X leverage of SMCX. So I sold all that yesterday. Then I sold the rest of my MSTX, and then I flipped it over for MSTZ. So that's short MSTR for Bitcoin. So that's a proxy for Bitcoin. So did that, those two. Then I had RX left over, and I just put this one in to show you that, yeah, I have a lot of these smaller positions. Okay, and I'm gonna have to start slowly dumping them by Friday, I guess. I don't know what's gonna happen on Friday. It might be a recovery day, and then on Monday we'll start rolling back over. So right now we're in a little tough time. All right, a little tough time. So I'll put it out this way. I'll put it to you this way. We're going to have to be very flexible. I know you guys are not going to like that, I suppose. You can't hold anything more than a couple days, maybe. And it's going to go wild up and down. And anybody that's an investor, they're just going to hate this month. And probably the next 2 months, too. So probably the whole quarter is going to be painful. You're going to go nowhere. So here, see that? Perfect. Distribution pattern on Bitcoin right here. So you have the Wyckoff distribution. So I use this schematic, distribution schematic here. So you see it moves up. You have this final test here. You see this one? This final up move. This was just around 3 hours after the close of the NYSE. And you see here too, this whole up move was during market time. So as I've proven before, Bitcoin is highly tied to the actual open and close of the NYSE, because all the ETFs that trade with spot Bitcoin is huge. They own a lot of Bitcoin right now. They probably shift in terms of options too, because I think SEC last month allowed them to have options on those ETFs. So you have options on ETFs that derive its value from spot Bitcoin prices. So these things have huge influence over the actual pricing of Bitcoin right now. And probably Ethereum will be also influenced even more later. And then by the end of this year, probably Trump's new SEC will approve even more ETFs for every type of crypto coin out there that's popular. So Ripple probably will be next, and then maybe HBAR, Hedera, who knows, whatever the other ones are that are popular. I think maybe Cardano, right? And anyway, but as I said, if you look at this, you did your homework, you look at the chart, you'll be like, oh, okay. You see this weakness here after this final up move, and you see no more volume coming in. That was the last big green volume there. And then you see this next one, this next green volume went nowhere. And from then on, it was low volume slide, right? Because now we're not even approaching this last red bar here. This is 40-minute chart. And then just before market opens, right, you have this move down here. But overnight, you see this weakening. Like, you know what's going to happen today. So if you went in pre-market, you probably loaded even more shorts, and you just would have went down with it. Okay, so that's easy. This is the easy move. This is the easy move. Now, what's the hard move? Because we got to do planning about what's the next steps. This might just recover back up. So if Friday goes well, then let's say we hit 96 tomorrow on Bitcoin. Maybe you'll go long one last time. It'll go up here back to 100K, and then from then on, it'll just move down into next week for the rest of the month. That could be what will happen, because this is a pretty significant red bar. It's going to be hard to recover unless there's some kind of news event that will come out, because anybody that was hoping for it to go up to 108, that was one possibility. It could have been that this held, Bitcoin would have held stronger here, tried to move back up to over 103, and then go on to 108 by Friday. But it doesn't look like that's happening. And I don't think NASDAQ is going to help you, because here, as you can see, this red candle here, NASDAQ, from Jerome Powell, sets the tone for the rest of this month. This thing is your enemy. And the last high, December 6th, from the last good news from economic data right here, unemployment, sets the bar up here at 526 for the NASDAQ, okay, for QQQ, NASDAQ ETF. Now, S&P 500, you can see it more clearly here, where we went all the way back up and recovered last month, Christmas, right? So just around Christmas, the day before Christmas, the day after Christmas, we pretty much recovered everything lost by Jerome Powell. But as you can see, we go back down, we go back up, and then you hit this dashed line, which again is here on Friday. And this time I drew it where this whole move was from the election. So this whole move from here, Halloween into after election, the first week, this sets the whole range that you have to look at. And now, since Jerome Powell killed this, we are stuck in this range here. And eventually, if there's no real good news by the inauguration and by Jerome Powell, guess what? The next time we go down here to 585, it's lights out. We're going lower. We're going lower to 540. Okay, so prepare for that. That is a possibility. So I'll be good. I'll be good. So excellent. Everything going as planned. Now, let's see what individual stocks I would say. Let's see here. I got a whole bunch of them. Let's look at Lululemon. So white women, bullish. Well, it was bullish an hour ago. This thing was about to break out, but I guess we're stuck again. So Lululemon, pretty good since 229. And I was thinking if it closes this gap up, 400 could go up to 500, whatever. But maybe that's not happening. I don't know. It looked good for a while. Today, Ulta has a new CEO, apparently. It popped up, and now it's following the rest of the market, going back down. Similar shape. Ulta makeup right there has a gap similar to Lulu. So these stocks are a very good indicator of how much women are spending, or women making their men spend. And so ULTA, Ulta, and Lulu, LULU. I don't know what's going on here. This looked like it could have been good, but maybe not. But I'll keep watching. Other one, okay, natural gas. So I'm looking for another short entry here for natural gas. Yeah. So yesterday we got a little pop for the weekend weather reports. I think last week was the last pop, so I shorted here, got out on Friday. That's why I told you guys I got out here. So I used cold, KOLD, to short this. So you would have got like 40% if you got from bottom to top. If you're really aggressive here, or if you went to pre-market, you might have got even more. Pre-market, you might have gotten 40% definitely if you did pre-market. So if you didn't, though, that's about 30%, not bad. Okay, so now we're gonna wait and see if I want to short this again, so I can get from maybe 40 to 60 this time. Maybe that's where it will be, but who knows? It might hold a lot better. Now, speaking of natural gas, there is a stock called EE. That's one of those nice stocks that I mentioned before. It had a drop today. I'm not sure what the news was. I did see that JP Morgan gave it an underweight rating, but it raised its price target. So not sure why it had such a strong reaction to that. But as you can see, it dropped to 27, recovered. So yeah, keep that in mind. There's a lot of other stocks like WMB, LNG, EQT, ET, KMI, all these stocks. I will mention them into this year because they will pop in the summer. So these guys are ready to roll because we're going into a commodities boom, and that'll prelude into the final end of the year. Okay, so that's the last gasp of the market. Bonds go up, then stocks go up, and then commodities go up. And then once the cycle completes, then we have our actual crash of the whole stock market. They'll all go down. Okay, and then that's it. You're done. We're done. So 2026 is probably when things go bad. And I told people late 2025 this year into early 2026, if you have a house in an urban setting, very popular urban center, you will probably get good prices because it will be a seller's market. All the buyers will be desperate to get in because what happens? Well, Jerome Powell will make a mistake. He will finally admit that, damn, I kept the rates too high and I'm crashing the stock market right now, or I'm crashing everything right now. So I'm going to start cutting like aggressively. When they start cutting rates, the mortgage rates will start going down. More people will start flooding in, trying to get in and lock in these rates. And this is when you'll get your big pump. And that'll be the final pump before a bigger event happening into early 2026. I don't know what that would be, but something will break. Something will break. Maybe this whole buy now, pay later stuff, maybe something else. Maybe China will be the one that will like implode. Their bubble will implode faster than I would think. And that's it, because they're going to try to re-energize their bubble, their whole housing market and things there. So it could be a big issue happening from China and it will start affecting us. Or it could be Europe. Europe is falling and crashing right now. They have political issues, and this is going to bleed through into their economy. And that will start maybe a global crisis. Yeah, we'll see. Yes. Anyway, but you have to time it right, you know. Don't jump the gun yet. You got to get the cycles aligned. This is where we have to watch things carefully this year. Okay, other ones. Gold. Oh, yes, gold looks good now. At least gold miners, I mean. I'm sure about the gold itself, but yes, I've been watching this. It's starting off the year nicely. It's recovered. A lot of people probably got suckered to buy gold in October. They got burnt. They got out. Now it's time to get back in. So EXK is my favorite, a silver miner, as you all know, and KGC will be my favorite gold miner. So I picked one last year. I said this will be my one to play this year. KGC, Kinross Gold Corporation, EXK, Endeavor Silver Corporation. Okay. All right. It's two. Now, what else? Lithium doing nicely too. Okay. So see what we got. SGML is the one I've been playing. It looks good. So people at the end of last year got out. They got it at a loss. Probably they bought up here at 14, 15. They all got out. And this is similar to a lot of other lithium stocks. They have a similar looking chart, right? This guy's probably bought at 5 something, sold at 3. Now new people are coming in. We'll have to see if the demand will pick up, though. This is all dependent on China. Okay, China is pretty much what's driving lithium prices, right? They have the most EVs to be sold to their domestic consumers. Their government imposes people to buy EVs from now on because of the smog issues in China. So yes, and probably India too. They have also big smog issues. People still use coal fire to cook their meat, run their plants, coal plants for electricity. They have a lot of pollution, so that's why EV makes a lot of sense for them. They have to stop all the smog everywhere. It just gets annoying when the whole skyline is full of that stuff, dust. And anyway, so that's what you got to look for, but it's dependent on China. So that's the only reason. Now we look at NVIDIA, the video we just talked about. Oh, you see, So look at that. It tried. It can't get out and make that new high stick, and it's just pulling back. Okay, so a lot of people will try to pump tech companies, I'm sure, and they'll keep trying to. But I think since Jerome Powell spiked the drink, it's done. People are now going to sleep. Yeah, this is going to be really hard to do. You cannot do that when interest rates are still going up. As you see from the data of today, this is bad, really bad. So TLT now has really confirmed its breakdown, going below 88 from the end of last year, now just going to 85. So this is equivalent to what's the interest rate now for 30-year bonds? 30-year bonds are now, yes, okay, it is almost at 5%, 4.92. Great. So if it gets over 5%, psychologically, that's going to start rippling all over the stock market. And this is not good since the DXY reached a high right on New Year's because of the weakening euro. So US dollar compared to the euro now is way stronger, way stronger. And now if you look at Japan, so USD JPY, all right, see how's that's doing. No good. It's almost at 160 again. So everything's set up for bad times. I think I'm not sure what the Bank of Japan is going to do the next time it hits 160, but the last time it did it, it got this weak. The Bank of Japan had to pump it up again, and that caused a real bad effect in the stock market because then the whole yen carry trade, we'll have to talk about that in more detail later, but you guys can look that up. Yen carry trade, that's pretty much what crashed the market over the summer. Okay, so you can look up yen carry trade. We mentioned this before on the streams in John's channel, both in the overnight streams, my streams. Yeah, but you guys can look it up. Yen carry trade. So yes, a lot of things are interconnected, and one of them is the actual pricing of the yen. Oh, okay, something I don't remember if I talked about last week. Maybe I skipped this one, but it was supposed to be something I would talk about was EWW Mexico. So Mexican stocks. And I was saying, like, yeah, it's hitting this area towards the end of last year at 48, went below it, right? Just before New Year's. Now it's recovering into New Year's. Only problem is the dollar is still too strong. I cannot say that this thing will recover nicely or not until that is fixed. And who knows what Trump will say about tariffs on Mexico. But if you're a gambler, yeah, getting it from not 10 to 9, if you use the leverage ETF MEXX. MEXX is 3x. Okay, it moves 3x of the EWW. So if you're really a gambler, yeah, getting it below $10 is a nice thing to play, just in case Mexico actually does do a recovery this year, and this thing can go up to 16 plus, maybe 22, because the real reason this thing collapsed was the election of their president. So their socialist president got elected, and it's been down ever since. But with I'm assuming China is going to be more of an issue than Mexico for Trump. Trump is going to play hard with Mexico, but will eventually be nicer to Mexico than China, right? So as a longer swing trade, I would say Mexico has a better chance of recovering all these losses from last year and move up this year. So who knows? Maybe it'll recover all the way to $32 if MEXX gets a good move, right? Maybe. You just hope for it. Well, let's see. Let's say this thing gets up to where it was by the presidential election here in Mexico over the summer. So 30%, right? So 3x of that. That should be 100%. So let's see how high we can go if we go up in a straight line. So $20. All right. Yeah, it'll be a lot more challenging to recover all the way up to 30 then. Mexico has to do a lot better. So we'll have to see what deals they get. Okay, Bitcoin is recovering. Perfect. So I don't know. If we want to go long on Bitcoin temporarily, yeah, you can go long. Yeah, maybe. And then see if it goes back up to 100, and you can short it again. Uh, so that's up to you though. Yeah, you do a counter trend trade. That's called a counter trend trade because right now the trend is down, right? Trend is down. Yeah. Trend is going to go down. So you're doing a short-term counter trend trade. Yeah. On the other side, flip side is this could still be a long because on the daily a 4-hour chart here, we're still moving up. So, you know, yeah, if you want to go long, I see no problem with doing that here. Let's see MSTR, let's see where that is. Yeah. Okay. I don't know. Maybe I'll go long before the day is over and then try to flip it again for tomorrow. I don't know. I think I'm satisfied. I don't want to be too greedy about this because it'll be hard to trade this shit. It'll be too choppy now. I think this move was just clean. Now you're just kind of like going up and down in this range before it decides to just crash or break out of a 385. Yeah, so this line here, that's why I said like you either short here or short up here. But I started shorting here yesterday because I just saw like too many signs on Bitcoin that it probably wasn't gonna hold it together. So yeah, that's it. Otherwise, I could have just kept going long here because I sold in 3 chunks. I sold one Friday, second chunk yesterday morning, and then another chunk, the final chunk, the final third piece at the end of day yesterday, and that was it. But yeah, if it went higher, that would have been lovely. Then I could have shorted up here and then pushed it all the way back down here. But okay, it didn't happen. That's the problem with trading, man. So you don't really know. You're just gonna have to actually just gauge things as they come, but you have to pay too much attention to it. I don't like that. Spirit stock. What is it? Man, that's a gamble, man. That's a real gamble. But buying stocks that are entering into bankruptcy, yeah, you could get burnt pretty badly. They're great for trading, but not anything more than that. Any good news will make it pump. I thought I didn't even know it's still listed. Spirit Airlines. I thought I thought it was delisted already. Damn, is this what it is? No, this is the Spirit Aero Systems. No, this ain't it. Yeah, there's two like yeah, what the heck? Yeah, Save. Yes, it was called Save. Wow, it already got delisted. Okay, let's see. Maybe it turned into a penny stock for real then. Yeah, Save Q. Oh shoot. Yeah, it's already. Oh yeah. It's already at this stage of the game. Oh man, yeah. Yeah, nah. All you're doing is you're just gambling for real. This ain't gonna work. Yeah. Once it gets to this point, it's about to be game over. It's nice when you just trade them like here when it gets oversold and you get a bounce, but after it did its first like move like this, then it's just slow death. It might get one more bounce on some news, but then you have to be an insider trader, right? You know, if you don't got inside information, this is not gonna be good to do. No. Anywho, what's the other ones? Oh yeah. Marijuana. Yeah, I'll have to talk about some of the another time then because I want to talk. Mind Med. So the psychedelics, MNMD, Mind Med. Yeah, this one's pumping finally. So I was buying it up here towards the end of the year, and same thing with ATAI. So this does the psychedelics. Yeah. Now $1. Now it's like that. So if you want to play penny stocks, you got some other options to play. This one for sure. ATAI. Yeah, this one was nice. But we'll see how far it goes though. I'm not gonna be too hopeful. I think this month. This month is gonna be tough. Way too tough. I got out of RXRX because it's just like for the same reasons, It did its thing, but like this thing could go up to 12, 15, whatever. But with the way Jerome Powell was talking last month, nah, it's changed my mind. If he said everything differently, sure, but not now. Yeah. Okay. Yeah, Antoine. Yeah, try to avoid those Chapter 11, Chapter 12, Chapter whatever's. Yeah, because they'll try to wipe out the shareholders. Like if you buy bonds now, if you kick into the bond market, that'll be more interesting. Bond market is more interesting for bankruptcy type stocks because they are the last ones to get wiped out. So those bonds will actually be worth something, um, when they restructure the company. But the only thing you're hoping when you're buying a stock is that the guy buying, like let's say somebody wants to buy Spirit Airlines, they'll keep all the common shares whole. And I don't know, does that tend to happen most of the time? Yeah, I think at that point you got to study to be a lawyer. I think most people that do that stuff, yeah, they understand the legal and the financial issues, and then they can just guess and estimate and give you a probability. Oh, well, this is more likely because if Spirit has good finances in their books, maybe they could get someone to buy them. It's more attractive, and then they'll keep the shares intact, or they'll say like, oh, well, look at the books, they look terrible. Even if someone buys out the company and saves them, they'll just wipe out and clean out the shares. That you'll just get pennies on the dollar for your shares, and it's just a waste of time to hold them. Yeah, something like that. Okay, what else? What else? What else? Hymns. Oh, hymns. Disappointing. Oh, yeah. I mean, it was trying to get back up to 30 again. I don't know. You see? Because now we're just following the rest of the stock market. Terrible. Let me look at XBI. Oh, this is too ugly. Yeah, XBI. So the ETF for the biotechs. This needs to get back to 104. I mean, the way it's looking right now, it just looks like it's just going to stay down here and then eventually just crash down to 84. So something like HIMS, any kind of biotech company, like the only thing like seems to be going up today is Moderna. Probably some kind of news happened because I saw in pre-market it was up. I don't know. Pfizer ain't moving up. Let's see what the healthcare. So the healthcare sector with the bigger pharmaceutical companies now, it's fading too. It's been down since September. Terrible. Mm-mm. So I don't see any optimism there. XOY, yeah. See, so nope, nope. Everything's short term, and I'm just gonna look at commodities and things like that. That will do much better. Oh, let's see, NVTS. What's that one doing? I don't think it's doing good today, huh? Yeah. See, man. I don't know. This is going to require earnings from Nvidia, huh? Probably something like that, or TSMC next week. I think next week, probably. Another one stock that I was interested in is Air. I guess AEHR, Air. I don't know how you pronounce the real name of this. Doing pretty well, but it's still in this range, and it has earnings. It was going to have earnings on Thursday, but because the market is closed, they rescheduled it to Monday. Now 13th. Every time they have earnings, they can just go up or down like 20-30%. So it's kind of risky doing that. But the way it looks right now with the base it's building, I was hoping this year will be good for one last move up in semiconductors. But with the way things are going now, I'm not that optimistic, but it did good. It did good on Monday. So that's true. It's still holding. Okay. It's not doing that badly compared to the rest of the NASDAQ. So that's true. So if NVTS wants to finally get out of $4, okay, I'll keep holding that one. But again, I'm not going to be that hopeful. Okay. So don't put too much money into this guy. But if you got in at 3 or at $1.80 in November, yeah, you can just keep holding, you know. I see no rush to get out, but that's something you gotta really worry about. I think as we go on into January. AAOI, yeah, still stuck here. I probably won't talk about it then. Gonna have to give me better things. WGS, I mentioned this in John's show. WGS. So this one, Gene DX, they do the gene testing. It broke out yesterday. I like that. But am I willing to think that this thing is gonna go up? It's gonna be dependent again on interest rates. So, Palantir, we talked about at the beginning of the show with the video. See, once people came back from vacation, they decided, oh, I'm getting out. I'm taking my profits. So the people that held because of tax reasons, I think, yes, they are selling now to take their profits this year. They'll get their taxes for the 2025 so they can pay their taxes in 2026. So they're getting out. So watch this area. If this thing breaks, we're done with Palantir then. The Palantir run from 2 years ago, it's probably done for this year. Yeah. Carvana actually is recovered. So it was already getting sold off in December, you see. So this thing is a 6,000% stock, and it's bouncing. So somebody is buying, but they didn't wait for it to bounce all the way down to 155 before doing this. They're pulling it off here. So I'm kind of wondering if these guys, they're just a little ahead here. No. You guys got in too early. I bet you this thing is going to bounce back down and get down to 155. Well, and if I tell you, is that the place to buy it? Okay. Let's see. Yeah, it would be. So if you're really bullish on used cars and you think this thing is still going to go up back to 400 or wherever, that was the peak. Yeah, 350, 370. Okay, around 400. So if you get it from 155 and you think this thing can actually get back up here to 350, 400 or something like that, yeah, that might be a good place to get it. So I'll keep that in mind. But yeah, not gonna really recommend it. Okay. So this one I got in, I tell you guys all the time, I got in at $3-4. I sold here at 15, 16, 17 or whatever, 18. It got up as high as 19. I don't think I hit that. I think I pretty much sold it all by the time it touched like 17. And then when it pulled back here, this would have been a great time to re-enter. But I didn't really care for the business. I was just like, how much higher can it possibly go from here? But then you see it, like if I would jump back in here, it would have been like, ooh, man, beautiful move. That would have blown away my Palantir play, yeah, from 7 to like 80. That looks like nothing compared to what Carvana did. Carvana was like probably the most beautiful trade to make for the last 2 years. This is just blows everything out of the water. Crypto, anything. This thing was the most beautiful looking chart. The only thing that looks anything better than that would have been WGS. WGS though is like stupidly crazy. I never seen a chart this clean. Okay, it's just amazing looking one. So these are rare ones, rare finds. I don't think you'll see them too often. So don't expect these type of moves. But like I said, always look for stocks in the new year. Right? Everything going from Christmas to New Year, look for the losers because they can be winners the next year. And look for the winners, they can be the losers in the next year, right? So ZJK is a Nvidia type stock because they had some news that they were going to get a lot of orders from Nvidia, and that's why you had this huge week in December where it pumped. Okay, so this is a penny stock at this point because it has no history, very low volume, but it is pretty perfect in the way it's trading right now, because here you could have bought here. You have the rising 18, you have this now curving down 40. So here it's going to pinch, right? So if this thing holds at $8 and then let's say towards the end of this month things go well in semiconductors and all that, this thing will try again for 14 and it might go back to 30, okay, from $8. So if you want something to watch on your watch list, put this one on there. So just for trading though, I wouldn't be telling you just buy and hold and be like, oh yeah, this thing is going to like be a steady move up. This thing is just going to bounce up and down like nuts. Like it's going to be normal to see it like go up and down 14, 15, 30%. So it's not something like you're going to be comfortable holding. Okay, so you're just going to have to accept that. But because it moves so violently, then you'll have a chance to really trade this thing if you time the right points to get in and get out. So just watch it in this area. Okay, just mentioning that one for any aggressive people out there. Another one that's aggressive to do is JKS. Similar story about being very volatile. This thing can move up and down very fast, But the way it's building this structure right now, once it breaks out of 30, it can fly real nice. You might see it at 50 or whatever. And this is solar stock, but tied to China. It's a Chinese solar stock. So any kind of stimulus, it's not bad. This thing might just blow up for no reason. But it will crash for no reason too. So again, another stock that you can watch on your watch list and keep in mind. So every day you could see like, oh yes, the perfect time to jump in, perfect time to jump out. Okay, right now it's in this box though. And then once it breaks out of this box, I'm expecting it to really fly. That's what you're watching. And the box is between around $21, $29. Okay, so 20 to 30 is the range here. And the line in the sand is $23 a share for JKS Jinko Solar. Okay. Let's see what else. Mention that. Okay, ChargePoint. ChargePoint is another solar stock. This does charging stations for solar vehicles. So ever since Tesla got in the game to do the supercharger network, and now they allowed other companies to adapt their charging points to accept superchargers, this thing has been a losing stock. But like I said, yesterday's losers might be today's winners. So I'll keep this one on watch. I see a lot of buying here. It's cheap as hell. So it wouldn't take much for one good news to pump this thing to $3, $4, $5, get it all the way back up here. But like I said, just something to put on your watch list. I'm not going to say it's going to be like a Carvana and turn around the company. Okay. But yeah, you never know. Okay, what else? I think I covered everything. Okay, guys. Yeah. Good. EXK, I covered that. Oh, PLG, I almost forgot. Platinum miners, platinum, palladium. Yeah, so it's doing well since dropping back to $1. I definitely am thinking about buying more. I don't know when platinum and palladium are ready to move. This is going to depend on how the Russian sanctions are played, because if Trump isn't going to lift sanctions on the platinum palladium that Biden put in, then they should move up again. Okay, so keep this one on watch. So SPPP is the ETF for I think they actually track the real palladium, right? Yeah, this one actually tracks the real palladium platinum. So this SPPP is the real palladium platinum trust. So PLG is the mining stock. So these are the miners. This thing will move more violently than SPPP, but you might get better gains on PLG if you get in at the right time. All right, PLG. I think that's called the Platinum Group. So Platinum Group Metals Limited. All right. Okay. Good. Done that. Did that. So now I'm going to talk about the dollar in this video. So I'm going to play some more videos for you. Okay. There you go. The dollar. Dollar is so important. How the dollar is. You don't want it to be too strong. You don't want it to be too weak.
Data expects the dollar will remain strong in the first half of the new year. Let's bring in currency strategist Jens Nordvig. He is also co-founder and CEO of Market Reader, a Wall Street analysis platform. So your prediction, Jens, welcome and Happy New Year. Your prediction for the dollar for the first half of the year, and will the second half be different, and why?
It's very hard to fight the momentum we have right now because, as was just mentioned, right, U.S. growth is better than growth momentum other places, and the Fed might get on hold. In the next several meetings, we might have a Fed that is just looking to be on hold, while almost all other central banks around the world are looking to cut, right? So that rate differential will go up, certainly against Europe, certainly against China. It's going to go in the dollar's favor. And we still have between 2 and 3% growth, which is pretty decent this far into the cycle. And we have also tariffs, right? Tariffs that will potentially impact, especially the dollar against China, and that's a factor as well. And finally, we have a lot of kind of political risk around the world. We've seen in South Korea. We've seen it in France, all around the world. Political risk is popping up, right? And relative to that, the dollar looks like a safe bet.
Yeah, so if you look at what's going on in Germany, in France, it is not just the former weaklings of Europe. It is now the strong countries in Europe, Germany and France among them, that seem to be suffering. So what does a stronger dollar, just so we slow down here, what does a stronger dollar portend for American multinationals that do a lot of business, all other things being equal, that do a lot of business in, for example, Europe or in Asia?
Yes, well, I think there's two things. The first is just the translation impact, right? The earnings that these companies have in Europe, and Europe tends to be the most important market for all the tech companies and so forth, they're going to get translated back into a weaker impact on the dollar earnings, right? So that translation impact is there. The second factor, I think, has to do with the tariffs, right? There's a lot of uncertainty about what tariffs will be. Will they be just on China? Could we get global and so forth? And I do think companies that rely on CapEx are potentially going to see a hit, in the sense that a lot of multinationals are just reluctant to make big investments before they know what's happening with tariffs, right? So the tariff fear is actually having an impact on certain types of CapEx related to exports, even before we know what's happening with those tariffs.
Tim?
Hey, Jens, it's Tim. So let's talk levels on the dollar index, which has already moved. The Dixie's, had an 8-9% move really in a short amount of time. We're kind of through at least the levels that we hit towards the earlier part of last year. Once we get through that 112 level, do you think we can even retest the highs of where we were a couple years ago?
So let's talk about it in the context of the euro, right? So the euro is at 103 now, and it came back from above 110. And we've had a sizable move for sure. If we continue along the path we've been on for the last couple of months, right, where growth is weak in the Eurozone and so forth, I think it would be logical that we test parity in maybe by the end of the first quarter. But I think the real issue is whether this political risk that's brewing at the core of the Eurozone in Germany, in France, whether that's going to start to feed into bond market instability and create a kind of nonlinearity where it's not just a couple of percent, but it's actually a kind of a real tension situation that gives us another 5% on top of those few percent. I think that's the scenario that I worry about a lot, and I think investors should take very seriously. We could be heading into a situation where there's tension right at the core of the Eurozone, which is something we haven't seen before.
Oh man, that doesn't sound good. Well, yeah, Europe might cause a crash for the whole globe then. Oh, great. Oh, no, very nice. Okay. Next video will be about the China hacking into the U.S. Treasury. Let's see how that's gonna go. I think Zscaler. So somebody on John Galt's channel used to work for Zscaler. Maybe he knows more.
Us for an exclusive interview is Jay Chaudhry. He is CEO and co-founder of firm Zscaler. Jay, good to see you. Happy New Year. So let me first get your expert reaction to this breach of Beyond Trust and what it indicates about the need for cloud security. I mean, it was called Beyond Trust, right? This is supposed to be, zero trust and safe, but it didn't work out.
So John, first of all, Happy New Year. Every breach starts with typically stealing identity. And once they steal identity, they get inside your castle. They're free to roam around and do whatever they need to do. It's a typical thing that happens out there. Identities have been stolen. Identities will be stolen. The question is, how do you protect against that? There are two things every company needs to do. Number one, we do something called segmentation, which means if you go inside the castle, you should be able to go to only certain parts of it. So you can't do a lot of damage. You can only get to certain sections. That's the kind of segmentation Zscaler enables. The second part is being able to understand some of the behavior of the users coming in, and you can look for anomalous stuff. Look at the example of an airport. Sure, you could steal someone's ID, But being able to watch the behavior of people, that's the kind of stuff Zscaler does at Zero Trust Exchange. So you can actually identify stolen credentials and able to stop those things. It is a race with bad guys, and every enterprise needs to stay ahead.
So let's talk about your business in relation to this. You've talked about the strength of your pipeline heading into calendar 2025, your sales motion improving a bit. Talk about how customers are embracing these ideas and the pace of adoption, how that's affecting your business.
If you look at the budgets overall, the budgets for cyber protection, especially zero trust protection, have been going up. Every CIO and CISO I talk to, either the budgets are up or they're flat, while the IT budgets in many cases are going down. That's number one. Number two, there is deal scrutiny out there. The market is still somewhat tight. But when Zscaler goes in and says, I can give you better cyber protection, but I can also eliminate a lot of legacy security point products, firewalls, VPNs, all that type of stuff, then the customer is saying, I like that. Combination of better security and cost savings helping our business grow and deliver great value to our customers.
Jay, this Treasury breach happened on the heels of this other breach by Salt Typhoon, which is considered the worst telecom hack in U.S. history. It speaks to the fact that cybersecurity incidents are growing, the breadth of them. We know a lot of state-sponsored actors are behind them. For example, in these particular cases, China. How does that speak to how this threat landscape is evolving, especially with the increasing use of AI, with more autonomy, and now with potentially new policies coming with a new administration in a couple of weeks?
Yes, so first of all, it's not of any surprise to any of us that threats are growing, they're getting more and more sophisticated. Why is that? Well, number one, there's money involved, ransomware. Number two, they want national secrets to get ahead. Number three, in case of war, they want to embed it in your infrastructure, such as Salt Typhoon. So nations like U.S. have to step up. It is good to see the progress our country has made in the past 4 years, implementing zero trust in lots of federal and state agencies. But a lot of our infrastructure is still fairly weak. Salt Typhoon happened. It's not a big surprise. Being able to steal identity is not a big surprise. Companies need to go to the next level of cyber protection. That's where Zscaler comes in to help. And I think we just need to be paranoid. AI is making it easier and easier to find all those firewalls and VPNs out there, find the vulnerabilities and attack them. So it is good to see CIOs, CISOs, and board members are paying more and more attention to it. And we are proud to serve not only these public companies, but also our nation.
Okay. So all-seeing guy or tropes. Somebody asked me about cybersecurity companies. I really like the software sector. There was another stock, Asan, so ASAN, another one. A lot of software companies from last year looked really good. They looked like they were going to continue their uptrends into this year, but I don't know. I got to see what Powell says. He can kill everything in one instant, and it's just like those good-looking charts, they'll just go back down. That's over. Yeah, so yeah, I wish he said different things last month, and that means this month would have been really good to buy even more software companies going into the summer, but it's probably just going to be chopped up and down, up and down. It's not going to be a smooth move up for software companies, but we'll see. We'll see. I might change my mind. Okay, so keep watching the show. This month I'll have to see how it goes, and I think the next video will be about AI. Yeah, okay, one video about AI, and then after that only one video left about the single stock ETFs. Okay, and this is why it's going to be important for you. to understand that.
According to recent online posts from OpenAI CEO Sam Altman, one of the most meaningful AI breakthroughs may be coming faster than most people would believe. Deirdre Bosa has more on what it could mean for the AI race in today's Tech Check. These are some interesting comments, Dee.
Yeah, and Carl, you are referring to AGI, or artificial general intelligence. It is really the holy grail of AI. And Altman is essentially planting his stake in the ground, defining that critical milestone in his own terms, and announcing that OpenAI will be first. Over the weekend, in a blog post, he wrote, "We are now confident we know how to build AGI as we have traditionally understood it." And in a Business Week feature, he predicts that AGI will, quote, probably get developed during the president's term. Now, a lot of qualifiers in those statements, though, as we understood it, probably get developed.
Oh man, we're gonna get real artificial intelligence. So that's what it means. So AGI is like the dream, right? They're gonna make a robot that you really will believe is a human right here.
Developed, which speaks to AGI's controversial status in Silicon Valley. The concept is largely theoretical, and its definition is fluid and evolving, some seeing it as a milestone where AI systems reach human-level abilities in specific areas. Others argue that it involves surpassing human intelligence entirely. Now, recent advances in AI reasoning, like those seen in OpenAI's O3 model, they're fueling this debate by showing early signs of broader intelligence, and that has really shifted the conversation from if AGI will happen to when, and it's given rise to the
Oh man, yes, pump that stock, baby.
next milestone, super intelligence, or ASI. And just like Altman and OpenAI were first to capture this big Gen AI moment with ChatGPT about 2 years ago now, Altman is getting into position to brand AGI and ASI in the consumer mindset. Doing so, though, it will complicate its relationship with its biggest stakeholder and partner, Microsoft. Under their agreement, the mega cap loses access to OpenAI's technology when the startup reaches AGI. Where that stands today, though, it's unclear. The information has reported that they redefine the milestone as AI systems that can generate at least $100 billion in profits. Now, that would be a long way off, especially as Altman tweeted over the weekend as well, that they're losing money on OpenAI Pro subscriptions. The FT, meanwhile, has reported that OpenAI is looking to ditch the AGI clause with Microsoft altogether so that it might be able to unlock more investment needed, presumably, to reach AGI and ASI. Now, we reached out to OpenAI this morning. We haven't heard back yet. But while that is negotiated, Altman, he is wasting no time jumping on the next AI milestone, superintelligence. This is an AI system that surpasses human intelligence in virtually every field, including creativity and decision-making, problem-solving. It's a term that we've heard more publicly from SoftBank's Masayoshi-san, who always thinks in the biggest, most ambitious scale possible. But now you got Altman and OpenAI positioning themselves as leaders in that vision, which is smart from him. He did that with generative AI and ChatGPT. It looks like he's now sort of lining things up for that next milestone, AGI, and later on ASI. If you believe we're going to get there.
Okay. So we got the hype train building. No, I do not have any thoughts on that. I believe CRNC is the competitor of Sound, and yeah, all I know about Sound is that it goes up, right? That stock. So let's look at the chart. So if CRNC is the next Sound, sure, So SOUN also got. I mean, Nvidia bought shares of Sound way back when, so I'm sure Nvidia will get their hands in a lot of AI companies. And this is why I said, if Jerome Powell said different things, Sound was just the beginning. There's going to be tons of other stocks. RX is another one that Nvidia has put money in. So yes, this is not going to be the end. There will be many more of these little software companies that will get funding or partnerships with Nvidia, because Nvidia wants customers. Okay, Nvidia wants to help software companies use their products. This is how things were done in school. When I went to school, if I wanted to learn engineering, I had to use software packages or hardware packages by monopolies, companies that want you to be the next generation of users. So Nvidia has already gotten ahead of it, where like they have so much money because their stock price is so high. They have a lot of revenue every year. Their free cash flow is enormous. They can spend freely money to give to their customers to help them grow. The more customers are benefited by that will help Nvidia in the long term. And this is why they want you to keep using AI software too. So you have middlemen customers and end users like you all together to keep Nvidia stock pumping, pumping, pumping. That's it. So no, I don't know about CRBC or whatever. Yeah. So all I know is that they're a sound competitor, SOUN. You see this? And if you look at this stock, it looks like it's done. Look like it's about to be done. Yeah, I think that's it for sound. No more breakouts here. I don't think it can survive because it already made a new high when it got above 18, and that was when it had its IPO. I assume this was an IPO or SPAC of some sort. I don't think it was a SPAC though. SPACs usually start at $10 at the starting price, so this probably was an IPO. It's bite back to its IPO price right now as we're speaking, down 10% today at 17.88. Or well, not to its IPO price, but the highest price just after its IPO, May 2022. That was definitely a bad time to have an IPO, but yeah, you can see that. And let's see, CRNC probably just got like a huge pump off of that, right? I'm sure, yeah. See, yeah, and this stock is probably. Let me see what his name is. Carrots. Yeah, look at that. It's a penny stock. See, and let me show you the stock I mentioned earlier today. What was it? I think it was next to Jinko Solar or something like that. Tesla, PLG, KG, ZJK. So ZJK got orders from Nvidia, and look at this bad boy. It pumped over like 200-300% at one point that week. It got all the way up here from $6 to $30. And I'm assuming somebody must have knew the news was coming because the week before that, in Thanksgiving, it was already moving up 26% for some reason. So there must have been some insiders here. You see that? Before that news announcement. So yes, anything Nvidia touches becomes gold. So you're going to have to try to find these companies before Nvidia gets to them. By the time they pump, it's like, well, you got to wait for them to pull back and then get in. Because you're going to have to get insider trading if you want them before they do this. I don't know what ARBE is. Let's see what that one is. ARB Robotics. Oh boy, they're going to touch this one too. Yeah, you see that? Look at this one. Very similar to like WGS, where it like IPO'd right during the time when you had all the bubbles for tech at that moment. Terrible time to IPO. Now it's getting a pump, isn't it? Okay, ARBE. And then what's the other one you want to talk about? AUR. Let's see. A lot of trash. So guess this one is already too well mature. It was already going up. This was definitely a SPAC. You see, this is a SPAC. When the price starts at $10, this is how they did the IPO. They used a SPAC. Same time too, around 2021. So just before Jerome Powell doing all his things and crashing the whole stock market. So a lot of these guys got their IPOs at the bubble. So another sign of a bubble in the stock market is because you get a lot of IPOs. People always want to get the highest price. So they'll start pumping out a lot of companies with high flying ideas just before the crash. So this is another sign. If you see a lot of people promoting IPOs, SPACs, stuff like that, yeah, you know the market's going to turn. Anyhow, I don't know. I'll keep them in mind, though. Okay, I'll put that on the list. But as you know, I'm not a fundamentals guy. I just look at charts. But a lot of these companies are going to require Jerome Powell to say nice things. If Jerome Powell says bad things, these things won't survive. These companies do not make any money, I'm going to assume. They are long far away from making any money. They are reliant on showing that they will have tremendous growth. And if they can't hit those marks and the interest rates stay high, then they'll have problems later on. So people won't touch these stocks in any sense. And this thing is already about to hit $10 again. So that's probably a resistance area. So that's a big reason why this thing didn't explode as high as the other ones. You see, this thing was already moving up into it. See, for other reasons. All right, but yeah, I'll keep those in mind. Keep those in mind. As long as Nvidia keeps making money, you can bet there's going to be other software companies like that that will take advantage and take in the money. Okay. What else? The last video was the single stock explosion. All right, but before we do that, let me show you this. I'm going to remind you guys about the cycles, okay? And then I'll play the last video so we can wrap up before 2 hours here. This thing, the 6 stages of the business cycle. Okay, so I remember I said bonds go first, then stocks, then commodities. So on the way down, bonds start improving. Okay, so that's when you know like the dip is coming. Then the stocks start turning up, then commodities. All right, so usually before the recession ends, you'll hit a bottom in stocks, but you'll first see bonds start recovering. Now, we are at stage 3 going into 4 right now. Okay, commodities, we should start seeing move up, right? We've seen gold, we've seen silver, we've seen some signs that copper might turn, but it hasn't turned yet. Copper hasn't turned. Oil is still down. Natural gas is turning. So we're starting to see some signs that we're getting out of stage 3 and going into stage 4. Now, stage 4, like I showed you, bonds, right? The TLT ETF. You see the bonds have been getting weaker and weaker, and they're just about to collapse. Now, if I see bonds collapsing later this year, like really go down, like you'll see bonds like spike above 5%, like really hard, and just stay there, then you'll know something's up. That'll be the sign. And you'll see a lot of the oil and all that stuff rise with those bonds going down. Then we're going to have to worry about we're going into stage 5. That's when bonds will still drop, but now stocks are dropping. And this is the point at stage 5 when Jerome Powell says, whoops, I made a mistake. And when he does that, he'll start cutting rates and bonds will stop like going down. They'll start slowing, okay? And then what's going to happen is that we're entering into stage 6 here, where like nothing is getting saved, because stocks will have a little bump up, but it'll continue its way down, and commodities, oil, silver, gold, they'll all go down. Everything will go down. And that's the time when you just have to get out of everything. So we want to know when we're getting into stage 5. Okay, that's what I'm waiting for. I don't think we're there yet. I think we're just getting into stage 4 here. So stocks will still go up, but probably not as high as last year, unless you pick out the right stocks. But commodities is the place to be. So at this point, from stage 4 going into stage 5, you want to be in stocks that are tied to commodities, mining stocks, oil exploration, gas exploration. Things. What other things like shipping? So a lot of shipping that does natural gas shipping, oil shipping. Yeah, these things. So that's it. Okay. All righty. I think you get the picture. Okay, what else? I think I was also going to mention something because Gary was chatting about scanning. So we're going to have to get into scanning again. So here is a scan. So I use stockcharts.com, and you write a little script like this. So this is more sophisticated than other scanners you'll get, but you have to pay for it though. Okay, this is not free. You got to pay for the service. And then every day you can set it up where it scans every day, every week, or during the day, like let's say half an hour after the before the close, or half hour after the open, it'll scan something for you. And I ran this one. Okay, this one is a alert test, something I made some time ago. And what it does is it looks for things that have a really good trend. All right. So stocks that have a really nice shape, they just go up very clean for the past like several weeks or something. So you can see right now who's the leader, the quantum computing stocks, right? And you have AUR, the stock that Tropes just mentioned, is on the list as well. Rocket Lab, see that? So also space exploration, LUNR, also space exploration. These have been doing very well. And I can just go down through the list and see other things too. And you can see like Ralph Lauren, Williams Sonoma. So you had some retail stocks that are doing good. Some software companies, like I said, somebody asked me about that. Software, some of them have been looking good. Yes, yeah, and we have some natural gas stock right here, LNG. Planet Fitness, another funny one. I think this one is because it has a buyout. Did somebody buy them out? I forgot. I remember there was some news, so that might, you have to ignore that one. Let's see what else. Dillard's. Yeah, okay. Retail, right? Bank, Citigroup. Okay. Google. Yeah, that's no brainer. So yeah, you can have, and these are like penny stocks, so you can ignore all these ones down here, except for this one. This one is China. I mentioned that one last week. This is probably the only Chinese stock that has a clean, nice chart, except for King Cloud, KC or whatever it's called. Cisco Systems. Okay, yeah, nothing else that pops out to me. But yeah, you can run these type of scans. You can see which one's strong. Yeah, Robin Hood. Yeah, there you go. And oh yes, Joby. So this one's the electric vertical takeoff and landing type stocks. I should have mentioned Archer. I forgot to mention that one. Archer scanner screen. No, I don't know. It's just, I guess it's just the way they name them, because scanning is specific for the stock charts, because you're actually giving detailed criteria to scan, right? So let's say I use like FinViz, right? So this one's a screener. All right, because this one's very simplistic, and this is the one you'll get in like TradingView too. Although TradingView is getting more sophisticated. So Gary was asking about Thinkorswim versus this. I'm assuming they're all the same. They're not going to be like like this one here. This one is more like pseudocode, right? You write this code, and then you go specifically, hey, I want the weekly high greater than last week's max time weekly. So this is, look at this. This is very sophisticated. Right, and then I look at the indicators like SMA, MACD, so moving average, MACD, and Williams percent R. Like I put all this crap in there, so it's very, the way you can build it is a much more has much more nuance to it. Well, compared to this one, this is a screener. So I'm just gonna say, okay, what do I want to screen here? So I'm restricted to what I can do. This one I can say 20-day simple moving average has to be a 10% above something. You see that? So like this one, I'm very constrained in what I can do, right? While over here, like I can be very specific in what I do. And I could just keep growing and building and making this even more sophisticated. So yeah, so that's why here, look at that. It's just a simple like 200-day moving average, 20 days. Let's say this one's 30% better. RSI has to be like overbought or something, and you know what I mean. So this, it's very little what I could do, you know. But yeah, you can use FinViz. So here you can go here and play around with this yourself, right? You see what I mean? So that's the only difference, because I'm restricted to what I can do, specifically what they give me. Like I can't change this RSI to something else. I can't change this to 10-day or something. And you know what? And so that's exactly what you'll get in TradingView too. I believe it's the same style. Like okay, so okay, I could scan for a hammer. Okay, whatever, candlestick pattern, right? Yeah, or I can scan fundamental things like, oh, let's see what the forward PE is, what's the earnings per share, sales growth, things like that. Yeah. But here it's just purely technical where I can just go in and just make my own scans. So you can go to Stock Charts YouTube channel and you can search like the scan engine and they'll show you examples. So this is a lot more powerful. It's a lot more powerful. And I could always filter out like between groups. You can see here I could go like I could just look at certain sectors, subsectors specifically. So I don't need to look at all the stocks, and I can just analyze ETFs only maybe. So here I ignore ETFs. I put this one in. I don't take ETFs. So you see, like, yeah, you could be a lot more selective in this one. So hope you got the idea there. So yeah, you can go to finviz.com, and you go to the screener. And you can play around with that. But that's usually the free versions of everything they use. So anything that's free, they'll give you that. But if you want more sophistication, you got to pay. So that's it. And, it's not much per month, honestly. I don't care. But you don't need it unless you're really into technical analysis and you want some way to do things quickly. Yeah, so that's how you would do it. Here, I'll put the link to the YouTube channels here. So you can go to the stockchartstv.com or you can go to Stock Charts TV in YouTube. So at Stock Charts TV, and you can go search. They should have a play. Maybe they already have a playlist, and you look for the scanner. Whatever. They have a lot of examples, old videos. Tons of people just give examples of how they use it. And so, yeah, it saves you a lot of time looking for stocks. Because I don't think anybody here, unless you're like Joe Rabel. Joe Rabel will just like go and look at every stock in the market pretty much. He'll at least cover like S&P 500. He'll go through every 500 stocks individually and look at all their charts and eye it all with this four time frames, and he'll just do that way, just using the eyeball. But here you could just like make your scans and specifically look for something on the weekly or monthly or whatever, because you can change it right here. See, that's the other benefit too, right? You look at this, I can change the whole time frame. See, you see this? I put weekly. Like I could just compare daily to weekly, or compare daily to daily, or compare daily to monthly. I could change this all to monthly. See? So this definitely gives you a lot of flexibility and power compared to the screener, right? The screener can't get you to do that, at least. I don't think the FinViz does, right? Does it? Let's see. Technical. I think you're stuck with 20 day, 200 day. I can't even change this to week. Yeah, I can't even change that. So you already see the limitation right away from the screener. Like I can't even like change this to different time frames. So there you go. That's another downside to using the screener. It's just too easy. But the thing is like I think a lot of people, they'll just have Python. They'll get the APIs to grab all the data from some I think Yahoo used to be free. I'm not sure if Yahoo Finance is free, but you used to be able to get like free data from Yahoo Finance and if you went to Python, if you're a coder, you don't need to use stock charts. But I think for most people and people like me, I'm not going to waste my time. I mean, I did it for work, right? Coding and stuff in Python and things to make scripts, but I'm not going to waste my time doing that. They already did it for me, and they have this nice language which is easy to use. So like people don't even need programming. They could just build very sophisticated scans, and you don't need to know Python. But I think the benefit about doing it in Python and open source and that way is that you can eventually say AI can do this for you. Like AI will adapt and start making decisions for you. That would be the benefit of going that route. You see what I mean? Like you take this, but stuff it into a AI engine. So let's say I go to NVIDIA, buy their $3,000 box, and then I have my scripts running, doing all this scanning, right, through a scan engine. And then later I'll make AI decide, hey, go through this stuff, go through all these parameters, figure out what are the best looking stocks for me to buy in the next 6 months. And then make AI decide for me. Then I don't even need to do anything at all. Like, dude, they already said it's got general intelligence, right? It should be smarter than me, actually, eventually. So that's what I'm saying. So there are steps, but I think for now, this is a good way to use things because this does all the grunt work for you. But as you're doing this, you're planning ahead and thinking like, hey, if I can do these scans here, like eventually what I want to do is be able to do that on my own without using stock charts, because stock charts won't allow me to take all this information and grab it. Well, it can, I guess. I could run these scans, right? And then I could just have something to turn it into spreadsheets and then put stuff all these spreadsheets, the results that I get here, and just put it um into an AI engine. Like maybe I can do it that way. But then, it's not really a clean interface, because I'm just getting the outputs here going into the inputs. Well, what I want AI to do is take what I gave it in this script, and then the AI would like be intelligent enough to decide, hey, what if I adjust this parameter, this thing, that thing, and it will just go through it for me and try to figure out better ways to scan for me. It's supposed to be a human. It should be able to do everything flexibly. So that's the future. Yeah, I think, and that's why I say doing charts is a lot better, because it's much easier to turn this and put it into AI than anything else, because all you're doing is looking at a picture. All you're doing is looking at a picture, and AI can figure out what pictures are much easier than any other type of information. I think they're well trained to look for patterns, and charts are all about just looking for patterns. The better you look and find patterns, and find entry positions, exit positions, that's all I needed to do, and that's it. So that's where we want to go eventually. Okay. All right. So last video. This will be a long one, apparently. I didn't know why they want to talk about it for 20 minutes, but apparently they want to talk about for 20 minutes. Single stock ETFs, like the stuff I've been using, right? To short and long MSTR. Here you go.
Retail traders worldwide are turning to ETFs to get access to what they want the most. That's U.S. tech stocks. I'm talking NVIDIA, Palantir, Coinbase, Tesla, MicroStrategy. Since the SEC approved the first single stock ETFs in the U.S. in July 2022, this category has exploded. There's now 60 single stock ETFs trading in the U.S. with combined assets under management of $18 billion. Most of them are long versions that trade with 2 times leverage. Let's talk with Will Rind. He's the founder and CEO of Granite Shares, who runs the largest single suite of single stock ETFs. Ben Johnson, head of client solutions at Morningstar, joins us as well. Will, your NVIDIA 2 times long NVIDIA ETF, single stock ETF, it's the leader. You've got $6 billion in assets under management. I'm always curious, given the short-term nature of these, who owns them and what are they doing with them? Explain to us.
Yeah, so in terms of the ownership, what we've found is actually it's something of a worldwide phenomenon, that you've got investors not just here in the United States, but around the world. And in terms of those investors, that's everybody from retail investors all the way through to your most sophisticated hedge funds and proprietary trading firms in the world.
Yeah, so most of these investors, we've covered this and Ben's covered this for years. Most investors last year, they put money into plain vanilla index ETFs. That's where most of the money goes. But there's this increasingly retail component out there that wants to trade volatile tech stocks despite the fees and the risks that are out there. You've called this retailization of it, but it's fascinating how there's a global component to this. Explain what's going on.
That's right. So another word for retailization is self-directed. And this is about more and more people taking charge of their own finances. Now, as you rightly point out, that's not going to be necessarily for the bulk of their portfolio, but increasingly that's for a smaller amount of portfolio where they feel like they want to have a bit more control. They want to be able to actively manage that and maybe try and outperform. And that's where we see things like leveraged single stocks really playing. And as I said before, I mean, this is something where it's not just the US investor. This is a worldwide phenomenon because we have investors all around the world that are looking to the US ETF market first because that's the biggest source of liquidity. But they're looking to the names that they know and love, the Teslas of the world, the NVIDIAs of the world. They're only available here in the US, and that's why people come here to trade them.
So you have this group of young people that have grown up watching TV in South Korea, in Malaysia, in Japan. Their own markets aren't that vibrant or interesting. Is that your point? And China is difficult to invest in, and There's not a lot of tech stocks in Europe, so they grew up listening to Elon Musk and to NVIDIA and Tesla, and that's what they want. Is that, there's a theme here that's very interesting.
Yeah, absolutely. So you got from me two things happening. First of all, the domestic equity markets, the domestic stock markets may not have performed as well as
in
the
their
US
countries.
In their countries. So therefore the US is attractive. The second thing is when we think about global technology, Chinese technology is uninvestable now for a lot of people. Europe has no technology really to speak of. It's all here in the United States. And so people increasingly are accessing the US market and US technology stocks in particular from all over the world.
Ben, I want you to weigh in here. There's a lot of big themes here. One is this sort of globalization of trading, but there's two big objections that Morningstar and you have written about over the years about these kinds of products, leverage and inverse and single stock. First of the high fees, and Will charges 1% for his products, 1.06%. And the second is the daily reset. So investors holding this more than a day don't necessarily get the leverage or inverse coverage indicated. Tell us, where does Morningstar come down on all this? What's the right way to look at this?
Yeah, Bob, what I would say is at risk of this reference.
What's the right way to look at this?
Yeah, Bob, what I would say is at risk of this reference being lost on a younger, more global audience. In many ways, I think of these ETFs as being sort of the George Costanza of the ETF world, and that most investors would learn to do the exact opposite of what they're doing. First and foremost, they're designed to work on a daily horizon. Investors need to think long term. These ETFs offer exposure to a single stock. Investors are generally best served by diversifying broadly. Investors also should probably pass on leverage more often than not. And I think importantly, investors need to be always focused on fees.
Man. What a downer, man. Why don't you let people gamble? See, now you heard that, right? That guy, that first CEO trying to sell his products, his ETFs. We have a lot of foreign money in our stock market. So people would always be like, why is the stocks going up? Why do they keep going up? They're going way higher than the fundamentals because liquidity is high. So not only do we get money from Americans with their 401ks, we have pension plans and people just gambling overseas, pushing the money into our stock market because the US stock market is designed to go up. Everything is about the dollar. The dollar is king. This is how we keep the global empire going. It's centered in New York and Washington, D.C. Okay. On the buying and selling test. So what does that mean? What do you mean by that, Gary? And what's that? What's your opinion on the buying and selling test? What's the buying and selling test, Gary? Anyhow, let me see this. Let's see what else we got. Oh yeah, I was going to talk about fundamentals. Let me do that after this video.
Because investing, as we've learned from Jack Bogle, you get what you don't pay for, and what you pay for here is many multiples what you can get from a very broadly diversified, unleveraged total market index ETF. Now that said, let's not conflate investing with speculation. And I think what you have here is a tool that's most useful for speculators. And what we see in the data is that these ETFs have generally been used as advertised. If you take Will's own flagship fund, NVDL, for example, my calculation showed that last year, that is.
Oh, yeah. Okay, so we have to go over that some other time. Just looking at nines and whatever, that's not enough. So when you really get into the whole wait a minute, 9-step test, selling test. Oh, you're talking about Wyckoff, unless you're talking about like DeMark indicators with a 9. So the DeMark has that 9 thing, right? The 1, 2, 3, 4, 5, 6, 7, 8, 9 count. No, that's different from the Wyckoff. But if you're just talking about unless you're talking about something else, I don't know. Okay.
Entire share base turned over once every 5 days. So generally speaking, what we're seeing is that people are using these to take a punt and not necessarily to invest for the long term. if you're doing that with eyes wide open, and when I mean eyes wide open, I mean Clockwork Orange style eyes wide open, and in a way that isn't adversely affecting the bulk of your portfolio, then there's a use case here.
You know, I'm not sure you would disagree with a lot of what he actually says there. I mean, the daily reset and the high fees, you've acknowledged all that, and it hasn't seemed to be a deterrent for people investing in this. Why is that, and what do you have to say about those specific concerns?
Honestly, what Ben has just said is, to me, the exact sort of thing that people should be doing for long-term investing. And that's no different to the way that we see it. As I said, I think the majority of people, the reason why your S&Ps, et cetera, of the world maintain the highest number of inflows is because that is what people are doing. What we can't ignore is that there's an increasingly larger amount of capital going into shorter-term investments.
Oh, okay. So I get what you're saying, Gary. So you're probably reading the blogs, huh? You're probably reading those blogs where they give you the 9 things. Yeah. I see what you're saying. Yeah. Okay. Yeah, we'll have to go over those one day. But I kind of don't play it strictly. I don't play things strictly. As long as I could see like roughly you get the phases. Usually you have the phases that they talk about. As long as you can get that, you're pretty okay. You don't need to strictly follow these rules as much as you need to. All charts will have different looks to them, right? They won't be exact. But as long as you can identify the phases, that will be the most important thing. Yeah. And actually, there was a pretty good blog about the point and figure. We'll have to go about that later this week. So there was a recent blog out with the point and figure. So that'll be more interesting for you, Gary. Yeah.
These are self-directed. These are people that are looking to manage, some of their play money, whatever you want to call it. And that's where this kicks in. And when you look at the fees charged by, our products, for example, they're incredibly inexpensive for a short-term investor who's comparing it to the equivalent cost of, say, using leverage in a traditional brokerage account. So you always have to compare apples for apples. And from that perspective, as you can see from the trading volumes and the assets, these single stock ETFs like NVDL are incredibly popular.
Right. So your point is that if, first off, the people who are doing this aren't worried about the 1% fee because they're in and out on a daily basis. So it's a minuscule aspect.
Absolutely.
And comparatively, if they wanted to actually reproduce this in a brokerage account using options,
it
somehow,
wouldn't be 1%, it would be 15%.
Yeah, much more than that. You run long-short leverage inverse ETFs for several companies. There are pairs. You have one for Tesla long-short, Coinbase long-short, AMD long-short. And then I'm showing the assets under management. Here's the Tesla daily long-short here. What's going on is the short ETFs are a fraction of the long ones. And this is true of all the other 2 that you own here. It's just curious to me why is it because the momentum? I mean, look, you've got $1 billion in the Coinbase long, and $5 billion or so in the short. Yeah. Is this because it's a momentum play, right? The stocks have been going up, so there's not much short. Is it that simple? Look at it here for.
I think it is. I think it is that simple that we are in a bull market, so naturally we're going to skew even more to the long side. But I think if we wanted to take it back and be a bit more balanced, the market skews long anyway, and shorting just by definition is something that the vast majority of people are not familiar with and don't do. Even the professional advisor manager class don't typically use short instruments or aren't able to go short. So it's actually something that only a very small number of people in our markets use, typically hedge fund managers and other institutions. So this is providing those kind of tools, but naturally they're not as popular as the long versions, which people are more intuitively familiar with.
And Ben had a point about the turnover in these funds. And you, when we were talking earlier, made a good point to me. You manage 10 billion of the 18 billion. And how much does that turn over on a daily basis?
Roughly a third of it turns over on a daily basis. So if you think about 10 billion, somewhere around $3 billion turns over every day. So it's an incredible amount of trading activity. And again, I think that goes to the shorter term nature of the investors, the traders, the users of these products.
So Ben, weigh in here. I mean, what could go wrong with all this? I mean, you saw the assets under management there. They're all skewed to the long side because, well, you know, these stocks have been up. Skewed to the long side because, well, you know, these stocks have been up recently. But what's the downside here? What can go wrong with all of this? Be Jack Bogle for us, and as you often are on our shows.
Bob, where there's lurking risks is just in instances where you have, you know, especially retail investors that conflate speculation with investment, that don't adequately understand exactly how these products work, especially that daily resetting of the leverage factor that underpins some of these leverage products. They hold them for longer periods of time, and what they get is not what they would have naively expected. So I think, if anything, if I can look at that as glass half full, you know, maybe they learn some painful lessons along the way, and they come full circle a bit faster than they may have historically, you know, learning from these Costanzas of the ETF world. But generally speaking, you know, as I shared my own data, as Will's validated, you know, what we tend to see just based on the sheer trading volumes here is that most of the investors who are using these products are using them in a way that at least seems to show that they know exactly how they work and they know exactly what they're doing. You know, they've read the user's manual for this this particular set of chainsaws.
Yeah, that's why I've sort of moderated my dislike for them over the years, because in the early days with the index long and short, we had big problems. I mean, I know viewers had a hard time getting their head around the reset, the daily reset. They couldn't quite get that. But I think investors are getting a little more sophisticated. I'm not in love with these for the exact reason that you said, but I'm particularly alarmed when people do this and think they're going to get a different outcome because they don't understand the product. I think that's a little less likely now as people get more sophisticated about what these things are doing.
Yeah, that's right. I mean, single stocks are new in terms of the category of leveraged single stocks, but leveraged ETFs are not new. I mean, they've been around for 15 years now. We've been through peaks and troughs. You know, we've been through financial crisis, COVID, et cetera, and these products have delivered, you know, through that period. So I think the point is well made that, like any investment, you have to understand how the product works and the associated risks involved. But this is not something that is new. This is a new category within the leveraged ETF business. And of course, when people look at, for example, a advantage of having a product that has no margin calls, is able to deliver 2 times leverage, if that's the leverage factor every day, that is the pro to some of these cons.
And I don't want to get too deep in the weeds, but give us 30 seconds on how you actually accomplish this 2 times long. What kind of derivatives are you using to actually make this magic work?
So it's typically a derivative contract known as a swap, which is a type of derivative that effectively provides that leverage, provides that funding to the ETF to enable it to try and achieve its daily investment objective, which is 2 times leverage.
Right, and your counterparty is charging you a fee to do that, that is built into this 1.06% that you have.
And those are typically large investment banks, of which people will be familiar with, but that's the way that the funds are achieving their leverage. And again, it's the same for all leveraged ETFs, regardless of whether it's single stocks or whether it's broad equity indices.
There's a wrinkle on this, another wrinkle. Got a lot of wrinkles here, folks. There are variations on single stock ETFs. There are covered call strategies now that exist. And essentially, folks, if you don't know this, that there's basically 2 parts to this. First is the ETF would go long a reference stock like a Tesla, for example. And second, they would sell a call or put option against it, normally near term with something like 1 month expiration. So you're selling the option and it generates income for investors. You just started a product around this recently, NVDY, I believe. NVDY, I believe.
TSYY, that's the brand shows the Yield Boost family, which is our new family of high income generating, high yield generating ETFs. And those are mixing options, like you said, with leverage.
So ETFs. Here you own Tesla and you're selling a put here for Tesla?
Selling a put, yeah, but it's on the actual levered Tesla single stock ETFs. So you're selling put options against underlying leveraged Tesla ETFs, and that generates a lot higher.
Oh, that's how
level
you
of
get higher
implied
yield.
Higher yields.
Right now, you haven't had a distribution, right, yet?
We haven't had a distribution. We technically had a tiny one for the Treasury income, but first distribution will be sometime this month.
Right, and again, this works great. You theoretically will have a great distribution on the 2 times selling, put options, as long as it keeps going up, right? I mean,
that's right, and we sell out of the money puts. So the idea behind that is to provide some capital protection, meaning that if you're just selling at the money options, then you don't have any capital protection against the downside. And if you look at the performance of TSYY, I know it's only been a few weeks since inception, but you can see against Tesla and some of the other competing products perform very well.
And Ben, the increasing complexity of the whole ETF world, just covering buffered products and JEPI and all of that, and just explaining it to the viewers and the readers, it's getting tougher and tougher. Some of the stuff's getting very complex, and yet there seems to be an appetite for it. How can you explain that other than the ETF industry needs to grow and collect assets under management and higher management fees? That's perfectly understandable, but what's the right way to look at all these new products that are out there?
Yeah, I think there's just generally, and has been for quite some time, Bob, just an appetite for regular income among investors. And in the secular trend, as most of the investors that have most of the money shift from accumulating assets to spending down their assets in retirement, that demand for just regular sources of income, I think, is only going to continue to grow. I think the other secular trend you see at play here is really just a rewrapping of strategies, of tactics, of trades that many investors, many advisors may have done sort of independent or outside the context of a prepackaged single trade solution like an ETF, coming to market in a sort of do it for me package, whereas previously it would be a DIY or do it yourself model. So I think there's two key secular trends there. I think there are also important things that investors need to keep in mind. First and foremost, when they see these very large, double-digit distribution yields that many of these firms publish, it's important to understand where that income is actually coming from and what it is composed of. So in some cases, it's the income coming from selling call options over whatever the portfolio or single security might be. In other cases, it's actually just a return of capital. So investors are kind of paying for the privilege of having their money sent back to them. So understanding the composition of these income streams, their durability, their volatility, and all of the various tax considerations is absolutely essential if you're going to use these well.
Yeah. Well, in this case, you're selling a put, right, on the 2 times NVIDIA.
Yeah, that's right.
And in theory, you're going to have a nice distribution.
Yeah, and we're trying to take advantage of that implied volatility difference. That if you think of the implied volatility, say on Tesla options, say for argument's sake, it's around 70.
Now you're turbocharging it.
Yeah, now you use the leveraged.
And this is how you can get
ETF
20, 30,
option.
40% distributions.
That's right, and then you can.
That sounds fantastic. It's like free money, but what's the downside? Try explaining that to people. Like, oh my God, I'm going to get a 40% distribution on this, or something. Yeah. You haven't done it yet, so I'm making this up.
The downside is just like any other product, that the value of the underlying, in this case, the value of the underlying options will fall or can fall over time according to the price. That's why we sell out of the money, to try and give some protection against that downside. But that's clearly just like any other investment. These things will go up and down.
Yeah. What's next? The race is on to find the next big volatile name, I gather here. Is there anything on the horizon you've seen unusual activity? Palantir? I don't know. I'm making it up. But
I think there's 2 things going on. So one, we'll expand the leveraged single stock universe, because that's where we have a huge amount of demand, and there'll be demand for different names, different sectors, et cetera, over time as market conditions change. We'll also be expanding our yield boost family, so providing access to those really high levels of yield, and that won't just be on single stocks such as Tesla. That will be against other sectors of the market, broad indices, et cetera. I think that's got a lot of potential to be a big family. And then broadly, we've got a new administration coming in. We know that there's going to be some big policy changes on the horizon. Those affect markets, and that will give birth to another set of new ETF ideas.
All right, I'm going to have to leave it there. Fascinating discussion, folks. start of the new year, start 6th year for ETF Edge. And that does it for this week's ETF Edge. My thanks to Will and to Ben. We've asked Ben to stick around and provide additional perspective on ETF trends in 2025 for the ETF Edge podcast. That's coming up. And remember, you can see all of our shows on the website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Oh, that was pretty good. That was pretty good explanation of everything. I don't know if any of you like caught enough of that. You probably should rewind and watch that. All the links are in the description. Every video I put here are in the description. But yes, this is why these things work. I mean, they got the options and all that. They do all the hard work for you. No brainer, but you have to use it correctly. You're not going to get the flexibility of learning options yourself and designing your own options trades. Okay, that's the only downside. But if you're lazy like me, you just want to get the move that you want up and down. They're pretty simple to use, so you can short and long without a margin account and all that. So it makes it easy. Now let's see how it's going. Market right now, does not look very good. I haven't decided what exactly I should do. If I should short again, go long here or not. Yeah, QQQ right now is just ugly. So, okay, let me go through this before we close out the day. It's 2 hours now. And I want to mention this, so we can continue this in the next presentations, but something called the Shiller PE. This is something those fundamental guys love to quote. And that's why a lot of people always say, oh, it's a bubble, it's a bubble, it's a bubble. Well, bubbles can go higher than you would believe it, because the Shiller PE back in the .com era went all the way to 44.19 before we went into a crash. So we're back at 37.96 as of this month. And this is the same position we were at in 2021 before the 2022 downturn. In July 2021, we had 37.97. So we're right back there, right? Right back there. So does that mean we will have a crash? We will see. We will see. But that's one thing people always talk about. Another one is always this thing called the Buffett indicator. Buffett indicator is total U.S. stock market value divided by the gross domestic product. Right now, the Buffett indicator says we are 208%. Okay, the ratio. So this is approximately 66.62%, or 2.2 times the standard deviation above the historical trend line, suggesting that the stock market is strongly overvalued. All right, so let's see. Right here. So September 30th, 2024. This is the last data point they give you. So according to this, we are quite overvalued. Another one is called Brock value. Here, Brock value. So even according to this, we are overvalued. Brock value, I believe, uses a comparison between the stock market and the bond market and decide how overvalued we are based on these metrics. Okay, so you guys can look up these things yourself. But otherwise, I would say, yeah, if you were a fundamental person, the stock market is overvalued. But that doesn't mean much. Stocks can still go up, especially with the AI hype, right? So it doesn't matter. AI bubble continue, we go up. If Jerome Powell doesn't crash the market, we go up. As long as foreign people keep buying these crazy ETFs to get into our markets, stocks go up. 401k still buying, you still get a wage from your 401k going into your pocket, yeah, stocks go up. So a lot of reasons why stocks still go up. It doesn't matter about fundamentals. Okay, so I could put the links in the chat for you guys. You can have that one, Buffett indicator, Brock value, and lastly, the Shiller PE, something that people always talk about. So yes, I personally just want to use charts. Okay. So yeah, we'll definitely go over this again. There's another article. Yeah, this one's probably pretty good too. So we'll definitely go over it again. But something to think about. Okay, something to think about. That fundamental guys always keep harping about. Yes, and later on, we'll definitely. I'll just go over the Y cost stuff again. Garion mentioned that, so I think that'll be good time. And then tropes, since he has the book, go over Joe Rabel's stuff. All right, the Joe Rabel stuff. This is how I use the multi-time frame charting, and we'll start going over again and again these things and practice. That's what I want to do. But for now, let's look at how the market is doing. And yeah, it does not look good, very good, right? So what is my decision for the end of the day? What should I do for my next trade? Do nothing, stay in cash. I think the only thing I would probably do was like get into cold, KOLD, short natural gas. That was about it. But I don't know if I want to do anything just yet. Tomorrow, I don't think there's any kind of. Oh yeah, Tropes is doing trading in the zone. Very good. Yes, very good book. Psychology. Yeah. So looking at this, the Nasdaq, very very weak. Ooh, ugly, ugly, ugly. Ay. So I don't know if it's going to turn around, but here you see like MSTR, right? And Bitcoin is just following with the Nasdaq right now. So let's just look at MSTR. We see this move. We hit that resistance, right? We go back down. So is this a new trading range for the day before it tries to go back up? And this is my question. So yesterday, this was the area where it was fighting at, and we're right back around there. I don't know if it's going to continue going down yet, because if we look at the hourly chart here, you see we're on a rising 18. So yeah, I mean, the problem though is, yeah, the Nasdaq just looks way too terrible for me to say that's a clear signal. Yeah, and SPY definitely not doing any better. It's the same thing. You see that chart? It's just like, nope. Nope. It has to change by the end of the day. So we'll have to wait, see what the end of the day is. And if you look at Bitcoin right now, let's see how that's doing. It's going to struggle at 95 again. 95 has always been the area where it has to fight, between 95 and 96. Yeah, it's going to fight there. So, but what's going to happen is that it's just the damage is so bad on the 4-hour chart here. It's just going to go back to 99 or something and just go fall right back down, unless something really changes in how the bonds are doing. Because if you look at the bond market, yeah, I don't know. Yeah, I'm not liking that. Look at the bond market right here. Yeah, I'm not liking that at all. Let's look at the weekly chart. Yeah, you see that? You see the weekly chart on the bond market? It did pinch here. So this is what Joe Rabel would teach you. Like this right here, going down, it goes back up, goes right, slams right into this area here. Because for him, he just looks at the moving average, right? He'll just say, like, look at that. That moving average is moving down. The 18 flatten out, moving down, runs right into it, goes back down. And not only is that area important, because this rectangle I drew from here back in November 2022 is significant. Every time it goes up and down, it goes through this rectangle. It's just like it has a fight, right? Because you see the two green candles here, these two ones, they pop right through them. And then right after that, you just roll right back. You just roll right back. It's just so important, this area at 94, 95 to 97. And now we're just below 86. The bond market is screaming. And that's going to be a big weight on top of the whole stock market in general, and Bitcoin as well. So that this decides everything right here. So without relief from that, yeah, I don't expect it to be easy for Bitcoin to try for 112, 114, or 115, but it can still try. So if you wanted to go long, yeah, this would be it. This would be the place to be for one last push up into Friday. So maybe you'll get lucky. Friday will be good, and then you get into Monday, and then Monday you'll short again. Yeah, then Monday you'll short again. So you gotta go up, yeah, go long, then go down, go short. Yeah, right. So easy, right? The candles, yeah, no. You know, that's why I said I don't try to do any candle patterns per se. unless it's really obvious. But what you would say is like, let's look at this one. Let's look at the Bitcoin one, right? Look at the 40-minute, like here. What you do is like you look for the most significant one with the most volume, right? That'll be like one. This is important. And then after that, you see like this thing sets the range here, because after that, this is the last major green candle. And then here, this one, you see this candle right here starts holding everything up after that. So this thing was so significant that it's just doing that until you hit this red candle trying to go down, but then you just reverse it with the green, and then you see this. So if you look at these two candles here, that's important. Then you look at this one by itself. That was important, right? It looked like it was like trying to form a local bottom. And then you look at this candle, right? You see the wick up there. It looks like it was a local top, because right after you got the red candle. So these two were important. These two were important. This one important because it held this last green candle's range. So when you look at these things, yes, you would probably try to look for a series of candles, maybe 2 candles at least, and then see how they move together, because this thing told the story. This thing told the story. This thing by itself told the story, based on what this thing was doing up over here. That's how I would read it. So if you look at those Wyckoff guys videos, you'll see how they do things. They just look for significant candles, look at the volume, try to determine from that how things are and how they set the range. Okay, because after that you see the range being built here. So this whole area, this whole cause, I guess that's what they would say, determines everything. Now, if this thing did differently, like let's say it did this, but after it tried to push back up and then go, so before the market opened, let's say overnight, it was doing the opposite. But as you can see, overnight it started weakening, and then this blue cyan line, which is based on something I drew here, because you see these candles here. So when you go one time frame up, now I'm doing a daily chart. I see this candle green. I see the red one here, another green, red, green. So you see all these candles, it had a tough time doing 101. So then I just drew a line from that. And then now when you go up here to today and yesterday, you see like this cyan line had a big effect, because now it was dancing on top of it. And then when it just punched through with this candle, this red candle here, look at it. It just broke apart. So I didn't even need to look at the moving average here, but you see the flattening moving averages now. It's just like, yeah, once you get used to that, you see these patterns enough times, you'll notice. Yeah, you'll notice. And Bitcoin does this a lot too. They call them BARTs, because of Bart Simpson is kind of like you have this like move up. That's one large candle, and you have a move down, one large candle, and on top it's just kind of a flat, like zigzag, like Bart Simpson's hair. So like it's kind of clear there. You kind of see it very clearly. So it's either going to be accumulation or it's going to be distribution. You don't know which yet, but the way it was moving, like after it did its final top, you see the way it's doing here. It's just like it's not even trying. It's not none of these candles here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 candles couldn't even get inside this red candle here, January 7th, 2025 at 1:20 or 40. Okay. Yeah, 40 minutes into UTC. All right. So that's 40 minutes after Greenwich Mean Time. Yeah. So how many candles was that? 40-minute candles was that it couldn't do that? Well, guess what? This wouldn't have been a surprise. This last 3 candles here going down, trying to do something, but not. See, no, it's still a red candle. Then the final red candle, this is over. Yeah. So I think from all that, you can figure out. If you see it enough, you'll realize. So you have to make your decisions quick. So that's what I'm saying. Everything has to be a decision, has to be made quick. But if you go up like to all the way up to the daily, you can see like where these things. This candle here, this red one, made in December 18 is significant. And that's 1 day's candles worth. And yesterday was the last green one to get into here, but we only made about like less than 50% of this whole body of this candle. And yeah, now that you're doing this, that doesn't give me much much bullishness. But at least the MACD over here, the MACD indicator is above 0. So maybe you still have some chance for the bulls. But right now, yeah, it's not looking good. Okay. All right. Hopefully that helps. We'll definitely try to cover some examples, more examples as we go along throughout the year. It's going to take time, before you get to get used to it. But from there, hopefully you can trade. Yeah. All right, guys. That's quite over 2 hours, 2 hours, 15 minutes. I'll see you. I'll see you around. I'll be back tomorrow, I guess, or unless there's something interesting that happens overnight. I don't think there will be any Chinese data or some Japanese data. I don't think so. So we'll see. All right. See ya.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Like I should feel like I should feel like I should feel like I should. Like I should go.